Well, Alexis, taking a look here at Palantir, those shares still jumping this afternoon, up more than 2% and outperforming the broader market. And that's after the company announced it won a government contract to supply data and analytics to the U.S. Army. Now, the contract is said to be worth $823 million, according to Palantir. And as usual, of course, these are always closely watched by investors since government contracts do comprise the majority of this company's revenue. Now, specifically, we saw that government agencies accounted for 61% of Palantir's sales in the first half of 2021. And this latest deal is in addition to a plethora of other agreements between Palantir and the U.S. Defense Department over the past several years. Now, some Wall Street firms did say that they believe that the move to the upside today in Palantir stock may be a little bit overblown, given, again, that this company already does have a number of existing contracts with the U.S. Army and Department of Defense. But again, a lot of optimism baked into this announcement here. And we are seeing these shares relatively holding higher here, although they are off session highs from earlier today, guys.
And Emily, I know you're also watching Constellation Brands down about half, 2/3%, and that's after they missed on their earnings, I believe missed on EPS, also raised their full year guidance. So lots to unpack in the report. What's in it?
Well, that's right, Jared. And really a little bit of a mixed report here when we think about that miss on those fiscal second quarter results. But again, that raise on that full year outlook. So suggesting here that beverage sales, especially for their flagship beer brands, are going to be picking up into the final months of this year. Now, specifically, we saw that Constellation Brands posted comparable earnings of $2.52 a share for that fiscal second quarter on net sales of about $2.4 billion. Now, on the top line, that was good for a 5% year-on-year increase, though both those earnings and sales figures did still miss expectations on Wall Street. Now, beer sales for brands including Modelo and Corona were the standout performers here, with those rising 14% over last year and 18% compared to the previous quarter, and all of that helping fuel this stronger outlook than had been expected here for Constellation. Now, specifically, the company saying that it expects to see those comparable earnings coming in at as much as $10.45 a share for this full fiscal year. That's up from a previous high-end outlook of $10.30 previously. So that is helping pair a little bit of these losses here, as we can still see Constellation Brands moving to the downside during this afternoon session, but still off some of those lows that we saw during the pre-market trading day, guys.
And Emily, talk about moving to the downside. The airlines getting hit pretty hard. I'm looking at American Airlines and JetBlue in particular. I would think this has something to do with rising oil prices and how much they're going to have to spend on jet fuel. But what's moving those stocks to the downside today?
Well, specifically, Alexis, we're seeing American Airlines and JetBlue really taking a leg lower this afternoon, and that's because Goldman Sachs actually downgraded both of these stocks earlier today. The firm now rates American a sell from a previous rating of neutral, and JetBlue a neutral from a buy. And as you were mentioning, Alexis, the big reason here is because Goldman Sachs does now see a higher cost environment for the airlines as a whole because of these rising energy and commodity prices. That's going to trickle into some of these jet fuel agreements here that are going to impact these airlines. And one of the things that Goldman Sachs highlighted specifically for American is that that company has a relatively higher operating leverage compared to other airlines within the industry. So that's going to further weigh on profits in this inflationary environment. And then JetBlue itself also has a partnership with American that will likely add additional cost headwinds to that airline as well. Now, not all bad news here from this Goldman Sachs note. The firm does still expect to see airline industry-wide margins recovering to 2019 levels in 2023. So a little bit of upbeat news here as well for the industry as a whole. But American and JetBlue definitely taking a leg lower on the heels of these downgrades, guys.
All right. Thanks so much, Emily McCormick.